It says, what happens tax-wise if I barter my services instead of receiving payment?
Ah, you think you found a
Tricky
loophole.
question. Yeah.
And the answer is that's not a loophole. If you do barter, you are supposed to report that just like it's any other kind of income at the valuation of the goods or services that you receive. It's very hard to determine that though. So it's let's pick a really trite example. Okay, so I help my neighbor mow his lawn, and in exchange, he helps me, or he doesn't even help me. He helps my wife babysit my kids, right? Something like that. So we've exchanged services. Those services have some sort of market value. You don't really know what though. And so how do you put a number to that? And and at that level, we're talking about tens of dollars, right? So it's not going to be significant in the grand scheme of things. But the principle is still constant throughout, is that as a U.S. Taxpayer, you are required to report worldwide income from all sources. And so receiving bartered services would be some kind of income. And then you would have an expense of whatever you have against that. So it is reportable. It is, in the vast majority of cases, impossible to determine. Where it might be traceable would be like if you have a commodity. So let's say you're trading like gold for, I don't know, baseball cards or something. All of those have market values and you can actually pick a number. So that is, theoretically more traceable than just random personal services. So you could put a number to that and then include it in your other income. It's funny. This is what we call Schedule One income. So you have your 1040, then you have the Schedule One. Schedule One is adjustments, basically, positive and negative adjustments. And in I don't know if it's in all tax software, but in the software that I used to use, there was like different line items, and one of them would be for barter, and one of them would be for proceeds from illegal activities. If you are selling drugs, the IRS wants to report it, and if you don't, then that's a whole separate charge they can get you on. Because that's how they got Capone, right? That's the old story. They didn't get him on murder, they didn't get him on racketeering, they got him on tax evasion because he didn't
Oh, not
report,
reporting the drugs he sold, right?
yeah,
Ah,
the all the things that Al Capone used to charge money for and never reported on his taxes. Barter comes under the same kind of stuff where you're supposed to report it, but how do you value some of those things? It's very difficult.
and I'm just curious of how he would have reported that. Just
And what's funny is the states that have legalized marijuana, they have this problem where it's under section. So we talked about section 280A earlier. There's section 280E, E like echo, where if you have a federally prohibited thing that you're selling, marijuana, then I think it's specific to Schedule One and Schedule Two stuff, but I'd have to reread it to be sure. But basically, or you have to report your gross sales. You're allowed to deduct cost of goods. So if you buy it for $10 and you sell it for 20, you can deduct that 10. However, you are not allowed to deduct anything else. So no operational expenses. So salaries, rent, utilities, all that kind of stuff you're just not allowed to deduct it. And what that ends up doing is that increases the cost of all those operations by the tax rate. Because in normal business, you deduct that and then you pay tax on the remainder. But if you're not allowed to deduct that in the first place, then effectively you just have a higher tax rate. It's a area of under the Biden administration, we actually thought we were going to get a law that was going to change that regulation, but never happened. And under Trump, probably not going to happen. Yeah, the people who run those kinds of stores, even though they're state legal, they're not federally legal, and they're still in this wacky tax regime. So theoretically, Capone should have done that, and he would not have been convicted for tax evasion.
that's really crazy, right?
Yeah,
I
it's crazy.
thought of that.
Yeah.
Um, it looks like we have an international question.
Okay.
Someone just wrote in and said, if I work remotely for a US company but live abroad, do I still have to pay US taxes?
Maybe.
It
So
depends.
it depends on your nationality, depends on where you're doing the work, depends on I mean those are the two primary things. So if you are not an American and you are not performing services in the United States, then most of the time you're going to be taxed under whatever that local jurisdiction is. But that's not always the case. It's going to depend on the tax treaty, one, if there is a tax treaty between the US and wherever you are, and it's going to depend on the arrangement of the US entity. So if the US entity is here, domestic, and is paying somebody foreign and there's no tax treaty, then there's going to be foreign withholding under the recipient fills out a W-8 BEN, and then the payer is going to withhold usually 30%, might be less depending on treaties, all this kind of stuff, and then it's going to file 1042s with the government each year with the withholding reports. But if the company is there and paying over there, then you're not going to be in that situation. So the details really matter when it comes to international stuff, and it depends. But yeah, so it gets more and more tricky as things become more and more virtual. So you might have a company in Wyoming paying somebody in, I don't know, Uganda as an engineer or something. And that person in Uganda has no tax ID in the US, has never stepped foot in the US. Are they performing services in the US? And you got to figure out, based on the relationship between the two countries, how that all gets treated.
All right, looks like we have a stock question.